Let's welcome Siddhartha Khemka, who joins us now on the show as well. Siddharth, good morning. One of the sectors that has been doing extremely well in terms of gains after a big drubbing is the defense space. And overnight, there was news that has come in as well, where the Defense Acquisition Council has approved a massive amount of orders/purchases as well. Who do you think stands to benefit? And do you think this rally in defense stocks resumes and we look at them going back to their previous highs?
Good morning. So if you look at the sentiments are again turning in favor of defense stocks, not only in India, but globally, there is increased talks of higher spending, and India can be a key beneficiary. Last few years, we saw the government also pivoting towards not only making for India, but also looking at exports as a key focus area. And I think with Europe looking to increase its defense spending, I think India, some of the Indian defense players could benefit out of that. Some of the leaders in the defense space, we believe those would continue to benefit. For example, what we like, Bharat Electronics consistently doing very well. We've seen the order book increasing in the last few weeks, and the government rushing in to achieve its order targets for FY25. I think the order inflows will keep coming in, and if you look at growth, continues to remain pretty strong even for Bharat Electronics. We are forecasting a 20-22% earnings growth. Valuations remain comfortable now at about 35 times on a forward earnings basis. The other stocks that we like, HAL and Mazagon Dock, both in different areas, HAL in the aviation space and Mazagon Dock in the defense shipyard space. All three of them are market leaders, continues to have a strong order book, strong execution, and healthy earnings growth, supported by a decent valuation.
No, absolutely. Sid, morning. KEI, Polycab, Havells. Those saw big cracks for the second time. Same news flow. I mean, a large entrant making it into their industry. What's your sense?
Yeah, Prashant, I think there is definitely a big dent to the sentiments for the sector if a lot of large, the challenge is these players have large balance sheets and they can put up large plants, and the details of Adani Group's plans are still not yet out. So I think a little bit of impact only on the sentiments. Ultratech plant will come up only in 2 years. We'll see very strong numbers from all these players in Q4. But the days of premium valuation, I think that will go away. And within the space, what we like Polycab. We downgraded KEI despite strong numbers to a neutral, given the premium valuation that it was enjoying. We believe that cannot be sustained anymore. Polycab is a market leader, and we believe that the impact on numbers will not be to that extent compared to some of the smaller players. It has the most diversified book, and I think earnings growth compared as well as the market leadership would continue to support valuations for Polycab, where we have a buy rating, and we continue to like that stock.
Siddharth, what thoughts on some of these auto stocks? I don't know, if there's any point looking at it, because we know that sales are not happening. All of them are hiking prices, Maruti, Hyundai, etc. Ola has its own problems. Hero yesterday announced entry into electric three-wheelers. So there's a lot of news flow. Are you buying anything in autos? And by the way, TVS is giving a 10 rupee dividend, let me add. So much of news in autos, which is actually great. Solid 10 rupee dividend from TVS Motors.
Yeah, I think this sector always remains in limelight some way or the other. We heard the Ola electric woes continuing, and the two-wheeler space continues to remain under pressure. Hero reported very weak numbers. So that's a space, again, looks weak. The metal prices going up, that is a bit negative for the auto companies, and we saw on back of that, companies announcing price hikes. The last price hike they had taken was as recent as Jan, and they are taking another price hike. That just goes on to show the pressure on margins. In this entire space, what we like tractors. They're consistently reporting very strong numbers, and in that also M&M is far outpacing the industry demand. Plus the launch of the new electric vehicles, that is picking up well. We believe that could be another strong foot for M&M in the passenger vehicle segment. There were concerns with regards to Tesla's entry, and the stock has corrected, which we believe is a good entry opportunity for investors into M&M. We believe that's the only stock that one can look at in the OEM space. We have a buy rating and target price of 3,675.